Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we had the FOMC. It was a big risk event, the first one this week, and is finally out of the way. The market was very cautious ahead of the release, and we even had some volatility early morning after the open. Potentially, that could be some adjustments of positions or portfolios before the event. Not big money, but due to the low liquidity ahead of this type of events, probably we had that flush of volatility in the morning. And then the market found itself in wait and see positioning closer to the event, finding value near Tuesday's low. After the event, you can see here on the continuous chart, this is the volatility in the morning. You can see that the 200 moving average and the continuous chart served as support, and that coincided with the gap low. The gap that was left there on Monday has been fully closed, but you see Friday's high acting as support in that 2450 area. And then later in the session, after we had the release, the initial reaction was a little bit negative. Basically, the FOMC said we are cutting, but this is like a final cut in the near term, and we will be more data dependent. And the outlook that we're seeing is good, so we don't foresee cutting further in December. So the market initially tried to sell off, and you see the moving average as well acting again as support. But then slowly the market found no reason to sell off and started pushing back up. And you had a late rally / spike towards the close, creating a separate distribution and a flush towards new all-time highs. So you had some backing and filling. I mean, technically this is some backing and filling, and actually the daily bar closed as an outside candle. You can see here that it traded below, closed the gap, went back through, and closed at the top. So this is very positive for the market. This is potentially an extension to the upside, and the late push that we saw outside this previous 2-day range created a separate distribution. So that should be treated as a break from value. And I think the odds are good at least to do some further exploration to the upside before calling a market like calling a top or something. You can see here as well, the new all-time highs. We are approaching the month end, and the monthly chart is sitting at its highs. So as long as we close above this key 3225 area, that's a positive outcome for the month. So looking closer on the market profile, there's little to add, just a more detailed view of what happened today. Volatility in the morning, wait and see, positioning close to the low of the range before the FOMC, attempting to sell off, but then finding support, and maybe there was some squeeze for the short side, and that's why you see this flush at the top. So focus for tomorrow definitely on this higher distribution. If we get acceptance within or above, that improves the odds of further upside. If you see this double distribution closed, so basically you trade back inside this, I mean, that would be now a 3-day balancing range. You get back inside, that will denote change, and that will increase the odds that the higher up prices are cutting off business. So the market will be balancing, and I think that will be a very interesting situation to see. Nonetheless, let's wait. Remember that on Friday we have non-farm payrolls, and that will bring a lot of volatility, especially now that the wording of the Fed said we are focusing on economic data, and will only cut if anything suggests that our outlook is wrong. So employment is definitely a key area to look at. If you have a very negative report on Friday, that could increase the odds for the Fed to cut in December, and that could prop the market further up. So let's see what happens, and also let's wait for further detail on when is this phase one deal with China gonna be signed now that the Chile summit has been canceled due to the social situation there and the protests. So let's see how the week ends. Manage your risk wisely, as we always say. Only take those trades that are appropriate for your trading strategy and your account. Remember that anything can happen at any minute because odds are just odds. So trade well and have a nice rest of the week.